Well, Jeremy, GMO called the dot-com bubble in 2000, the GFC in '08. What makes this a super bubble and how's it different to the past?
It's crossed off all the boxes. It's done all the things that a super bubble typically does, and it could start its way down anytime and perhaps a month ago.
So what are all the things a super bubble needs to do?
Well, it needs a long bull market, and we had 11 years, the longest in history. It needs a lot of crazy behavior, and we had some of the great crazy behavior of all time. I think they'll be telling these stories in 20 years. It needs to accelerate at the end of a bubble at something like 3 times the average rate of the bull market. And it did that. From COVID on upwards, the NASDAQ more than doubled, and it went up at well over 3 times the normal rate. And finally, the thing that is unique to the super bubbles, the 2 or 3 that just keep going and going, is that at the end, the speculative stocks start to peel off. And even on the upside, for the broad market, they start to go down. And that started early last year. The super duper specs, the worst of them all, started to decline. And then one by one, they fell in and started to drop. And as we sit today, something like 40% of all the NASDAQ stocks are down over 50%, which is pretty amazing since it's only the other day the S&P was at its all-time high in late December.
So does that mean the bubble has begun to burst?
Nothing is certain in life, but I would say that is the beginning of the burst when the specs that typically go up quite a lot more than the market go down as the market goes up. So the S&P went up 25% last year, and a lot of the most speculative stocks of 2020 were already going down. That is very rare. It happened in 1929. It happened in 1972 before the very big decline then. It happened in 2000 before the tech wipeout.
So you're saying we are at the beginning of a crash?
I would say it is likely that we are. I think it would be unlikely that the market would not come down by 50% from its peak. The broad market, the S&P, and it would be unusual if the specs did not do worse than that. The problem is it slow or is it quick? This bubble in the US is eerily similar to the 2000 tech bubble. It's led by the NASDAQ, it's led by the specs. 2000, the specs underperformed all year and the S&P continued to climb. It is just possible that the S&P will rally to a new high. I think it is impossible that the specs will. So I think the game has started, and it will play out perhaps rather like a 2000.
Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin chart. We'll do some TA, look at various time frames, and also take a look at market cipher. So that intro video was a bit worrying. Some analysts are seeing very similar things to that 2000 dot-com bubble, and we certainly have a lot of uncertain times. The war going on in Ukraine, high inflation, and also going through a pandemic. So it's always good to be prepared and have some money on the side if there is a big crash to buy things on the cheap. I want to start here looking at the monthly time frame. And I've just got 2 moving averages drawn here. This white moving average is the 12-month moving average. So basically the yearly moving average, and the red line is the 48-month moving average, which is basically the 4-year moving average, which is a good one to use, I think, because we have been doing these 4-year cycles approximately, with the peak here in November 2013. And the next peak in December 2017, and our current peak in November 2021. This red moving average is quite similar to looking at the 200-week moving average, which is approximately 4 years. Just looking at the 2014 bear market here, we can see we topped out around 1300. We came back down to this 1-year moving average, and we did get support and had a decent bounce. This is on the log scale, so it doesn't look like much, but this was actually a doubling of price from the bottom of this wick to the top. And we can see after that, we ended up breaking back below the 1 year moving average and continued the bear market, which did take several months to reach the bottom here. And we came down to that 4 year moving average and pretty much used it as support before we started the next bull run. In the 2018 bear market here, after topping out, we see a similar thing. We came back to the 1 year moving average, got a strong bounce. This was also a doubling of price here from around 6,000 to 12,000. We spent several months above that average. Once we broke below it, we continued with the bear market, and eventually after several months, we came back down to the 4 year moving average. And then of course we had the crash in March of 2020 with the stock market crash. So this was a black swan event here. We did also come back to that 4 year moving average, and then we continued the bull run. We can see with our current price action here, we did top out here in April and we came down in May to that 1 year moving average. It did act as support here. We pushed higher, made a slightly higher high, and now we have come back down and gone below the 1 year moving average. And just looking back here at 2018, we saw once we broke below the 1 year moving average, we did come up with these wicks and touch it a couple of times before going down. We can see a similar thing here. We have come back to test this moving average. But I do think we are in a bear market, and eventually we are going to come down to this 4 year moving average, which is currently at around 20,000. I do think it's going to take several months to play out here. We can see it did take a while to play out in the previous bear market. So this moving average might be a bit higher, possibly at 22, 23,000. And again, it's just an approximation. We did wick lower here in this bear market, but it does give an approximate guide of where the bottom of a bear market might be. But just looking at our current price action now, we are coming into a monthly close in just over 24 hours here. Currently, this is a green candle, but we'll have to see how it closes. You can see we are still below this trend line connecting the overall lows, and we are also below this blue order block coming from this red candle in an uptrend. These order blocks are areas of supply and demand. They become of interest later on when we interact with those levels and can act as support or resistance. We also see we are still below the golden pocket area here, just taking it from that 29k low to the 69k high. And for me to turn bullish again on a macro scale, would need to reclaim this trend line and this golden pocket, and also this monthly order block. And to do that in the month of March, we would need to get back above around 47,000 and close the month above that area. We are still making a higher low at the moment from this previous low when looking at the bodies of the candles here. This low was at 35,000, so we are still above that area, and that's important when looking at the RSI here, where we can see we're making lower lows on the RSI but still making higher lows on the price. So there is a little bit of hope there. This is still possible hidden bullish divergence. Going down to the 2 week time frame, we do also close this 2 week candle at the end of this daily close. You can see the 2 week order blocks here from these red candles in an uptrend. We have been spending time between both of these order blocks. This red order block is that monthly order block, and we see it's pretty much in line with this 2 week order block. We also have a similar thing with the RSI. We do have lower lows on the RSI, while we are still making higher lows on the price action. But we can see we have attempted to get back above this golden pocket area. We have wicked above it several times here, but we're yet to close a 2 week candle back above that area. Looking at the VPVR, the amount of volume traded at certain price levels, we do have this big range of volume traded here from this previous price action, and that's all the way between around 30,000 and 40,000. You can see it has acted as support so far here, and currently we are just above this major chunk here. We also see the VPVR spike here at around 46,000 to 50,000. So we are pretty much stuck in this range for the time being. And going down to the weekly time frame, We did see this pullback during the week as the stock market pulled back on that Ukraine and Russia news. And we did also see a strong bounce come back up here, as did the stock market. We did come down to around 34,500, and we did have that strong bounce currently at 39,100. We do also have these weekly order blocks drawn in yellow. These blue order blocks are the 2-week order blocks, and the red one is the monthly order block. We can see we've been playing between these 2 weekly order blocks. We have closed above this weekly order block on all these candles, on these pullbacks. And we have also got resistance off this higher order block from this green candle in this downtrend. So we're playing between these 2-week order blocks, but when we do zoom in, we see we're playing between also these 2 weekly order blocks here. So if we are able to get back above this weekly order block and close the body of a candle above the previous bodies here, this would be a nice W pattern, and we could possibly have a push up to the upside and test some of these higher order blocks. We do have that weekly EMA ribbon, which has been acting as resistance since we broke below it. We can see we did wick up to it here a couple of times, and currently the top of this ribbon's around 45.8. So we do have that resistance higher up. Looking at the RSI, we have a similar hidden bullish divergence on the weekly time frame as those higher term time frames. And we can see we're lower lows on the RSI and still higher lows on the price action. And to give more confidence that that might play out, we would need to see Bitcoin to close above this weekly order block here, approximately above 43,000. Looking at the stochastic RSI, we do need to get above this 20 level here. You can see we're pretty much at that level, and once we do break above that 20 level, it can give us a bit more confidence that we are going to start moving higher. There is also another possible macro pattern here using the parallel channel tool. If we connect the 2 highs at the top here and drag this channel down, we do see that we did bounce off the bottom of this channel, and it has acted as support so far. So this could be a key level to watch along this trend line if it keeps holding as support. If we do break below this channel, then that would invalidate this pattern. Currently the bottom of this channel is at around 33,500. And what's also interesting, if we do extend this channel and bring it all the way back here, we can see that it does pretty much line up with the high here back in June of 2019 after we did this bounce from the bottom of the bear market. So it does seem to be a relevant trend line here. And going down to the daily time frame now, I'll keep this channel in place here. And I've also kept the weekly order blocks in yellow here. And I'm just going to look at some of the daily order blocks just from the most recent price action here. There are a lot of daily order blocks if we do take them all the way back here, and it does get quite crowded. So I'm just going to look at the recent daily order blocks, as I think they are maybe more relevant than the older ones. Just looking at the price action here, again, these are the weekly order blocks in yellow, and I've just got these daily order blocks in white here. We can see from this red candle in an uptrend, this red candle here, this red candle here, and this green candle in a downtrend. We can see we had this pullback from 45k, and we did have these wicks lower here, but we did close all the bodies of these daily candles above this white order block, which is at around 36.8 to 36.9 area. So this did act as support here. We had this second order block here, which we managed to get back above. And now we were testing this higher order block, which is between 40,000 and 40,100 approximately. So on the immediate short term here, we are playing between these 2 order blocks. There is another order block higher up, and that's at around 41,400 to 41,600. Looking at the fib levels now on this move from 33k to 46k, we can see we came back down. We did lose the golden pocket here, but we were able to reclaim it. So that is a good sign for a move higher. Currently we are below the 0.5 fib level. And looking at the fib from the high here at 46 down to the pullback level of 34.4, We do see that 0.5 level has currently acted as resistance. That's also in line with that daily order block. And we also see that golden pocket area in line with this daily order block. So that 0.5 fib level can be a place we turn around. And also the golden pocket is a common area where we might have a turnaround. Bring up the daily EMA ribbon now. We can see we did get above it here briefly, but we did need this ribbon to flip bullish to give more confidence. And for that to happen, we need the yellow line to cross above the red line, the shorter term moving average above the longer term moving average. And we weren't able to do that. We broke back below the ribbon, and now we are testing that ribbon again. Can see we have wicked up to it a couple of times here and been rejected at the moment. The ribbon extends up to this golden pocket area, up to around 41,800. And just adding some trend lines to the more immediate price action here, just connecting the two highs here and also the lows. We could possibly be in a bit of a triangle formation here. So this could possibly come up for this second touch here, possibly to this golden pocket area, and possibly come back down in this triangle pattern. Price level again of that golden pocket area is at around 41.8 to 41.4, and that would also be in line with this daily order block from this red candle. And this could also be redrawn, this lower trend line, using this as the high and the first touch point, and this is the first touch point, but we would need another touch point here to draw this line more precisely. But we'd have to see how Bitcoin responds to this golden pocket area and this trend line if we do come up to it. And if we do break above it, that would be a good sign that perhaps we're going to push higher and try to make a higher high compared to the 46K high here. And looking at the stochastic RSI, we did get above that 20 level on the daily. So that is a good sign to push higher. The RSI is pretty much in the mid-range here at 47. It is important to get back above the 50 level to give more confidence that it is going to push higher here. And just looking at the VPVR, we're just going to look at the price action in this area where we have been ranging between 46K and 33K. And just zooming in on that, we can see that we do have a big spike in the VPVR here. The most amount of volume from this range was pretty much traded here in this golden pocket area. So this is a possible resistance area if we do come up to it, and we could possibly come back down in this triangle. And I also want to take a look at the Ichimoku cloud on the daily time frame, and just comparing this previous drop from 65K to 29K and the recovery to our current drop from 69K to 33K. And what we can see here is we did have this big resistance from the Ichimoku cloud in red here, and once we did break through that, we did end up pushing higher on a macro scale. We got support from the green cloud here. Looking at our current pullback, we can see we attempted to break through the Ichimoku cloud here, then we did get rejected and came back down below it. Currently we're back inside the cloud, so it would be more bullish if we are able to get back above this cloud, which would be above 42,500, and give us more confidence that we are going to try to push higher like we did on this previous pullback. And let's move over to market cipher now. This is on the 4-hour time frame. We can see we are still in the red with the money flow here. So this would need to flip green to give more confidence that we are going to push higher. The 6-hour is similar. The money flow is still in the red and looks like it is trying to curve back around here. The 12-hour is in the green on the money flow. We did get a green dot here, and then a red and a green dot that did get confirmed. The blue wave started to come up here. We do need to see the price move higher here and this blue wave get above the 0 line to give a bit more confidence. We did see that blood diamond here, which can indicate a big drop down. We did get a decent drop from that. And the daily time frame now, we did get a green dot. It did get confirmed. We'll have to see how much momentum we can get. Again, we need that blue wave to get back above the 0 line. We have been in the red money flow here for quite a long time. pretty much since early December. And on a more macro scale, we need to see this curve back around and get back into the green, like we did on this previous pullback here after the drop from 65k to 29k. Spent several months here in the red money flow. Once we got back into the green money flow, it did initiate a more macro move to the upside. The 2-day time frame now, we are also in the red money flow. It does look like we're getting close to a green dot here though. Again, the green dots are more reliable when we are in the green money flow, and the red dots are more reliable when we are in the red money flow. The 3-day was the worrying time frame because we did get this blood diamond, which doesn't appear very often on the higher term time frames, and the last one did result in that massive drop. But we can see also the blue wave here. It looks like it's starting to close off, so we could possibly see a green dot eventually, and that 2-day might flow onto that 3-day. The 4 days also quite similar, still in the red money flow, and the blue wave looks to be closing off, so we could be getting close to a green dot there also. And the weekly did print this red dot. It looks like it's likely to be confirmed on tomorrow's open. And the green money flow has been coming down here, and looking back in history, whenever we went into the red money flow, we're pretty much entering a bear market, as we see here 2019 and also in 2015. We are also going to make a new 2-week candle, and we see that blue wave still coming down here, looking for a green dot eventually here on the other end. And finally, the monthly time frame, we did get a red dot at the start of December last year. This blue wave has continued to come down here. We do see the previous bear markets, the blue wave did end up coming below that 0 line, and once we did get green dots on the monthly, it did pretty much indicate the bottom of the bear market. So I think that's about all in this immediate short term. As mentioned, I'll be looking for Bitcoin to possibly come up to this golden pocket area at around 41,500. And I think we might get rejected at that golden pocket area. We did have that VPVR spike here. I do think this may act as resistance, and we come back down and possibly form this triangle pattern. So I hope you enjoyed that analysis. Thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.